What's up, guys? Mr. Fit to Flourish here, and I wanted to talk today about when is the best time to pick up stocks. So let's get right into the charts and let's take a look at it. So I get a lot of questions about, hey, when should I buy stock? When should I buy this stock? When should I buy this stock? Well, I'm going to tell you right now, the best time to pick up a stock is on the daily time frame. You want to look for the 200 moving average. So in my case, the 200 moving average is this dark blue line. So once a stock hits that 200 moving average, that is when big money, hedge funds, and a lot of seasoned retail investors are looking to actually buy a stock. Okay, there's really no rhyme or reason except for that it's telling you that this stock hasn't really been at a bargain like this for about 200 days. Okay, so this is the 200-day moving average. Okay, so it captures the average price over the last 200 days. This would be the average the price that you would not see for 200 days, basically. All right, so this is a good area to go long on a stock. Now, Nvidia today is currently February 2nd, and Nvidia is at this 200 moving average, right around that $120 price. All right, and the PE ratio is right around $49, 49, which is actually pretty good. Now, if you take a look at this previous example, at which I was like, hey guys, you might want to pick up Apple here. What happened? We saw that Apple had a crossover. So this pink line is the 9MA, the yellow line is the 20MA, let me just make this, the orange line is the 50MA, the 100MA is this light blue line, and then the dark blue line is the 200MA. All right. So right when Apple hit that 200 moving average is when it was the best time to pick up the stock. All right. And that was right around $220. Then on the next days, the preceding days, we saw Apple have a pretty big run up because, again, that is where big money and a lot of retail investors are looking to pick up the stock. All right. Another good area to pick up a stock is usually around that 50 moving average as well. So that's the orange line. Okay, that orange line. And I can show an example on that guy as well. All right, so in this case, you see Google here, Google crossing that orange line. And again, that's after a downward move, and we get a cross back above that orange line, it's another good area to just pick up the stock. All right. Last but not least, another area to pick up a stock is after a 920 crossover. And again, we're looking at the daily time frame. A 920 crossover on the daily time frame. What does that look like? All right. A 920 crossover is when the pink line crosses above the yellow line. All right. A good example. Again, we get a downward move, and a good example is right here. You just pick up the stock. After the pink line crosses that yellow line, you'll typically get a pretty big move to the upside. Why is that? The 920 crossover is known to show market structure shifts. So what does that mean? That means when the market goes from going in one direction, so from going down, once it the 9MA, the 9 moving average, crosses above the 20 moving average, it's going to start shifting and causing the stock to go back up. Okay, it shows you that the most recent prices are extremely bullish compared to the last 20 days. So the 9 most recent days have higher closes than the previous 20 days, which is usually a sign of strength, a sign of influx of buyers. Okay. So that 920 crossover, good area to pick up a stock. Again, the 50MA, if we cross that 50MA to the upside, like right here, get a cross to the upside after a downward move, another area to pick up a stock. And then last but not least, right on that 200 moving average. If we hit that 200 moving average, that's a good area to dollar cost average into your stock. So if you already own the stock and you see it's tanking and it hits that 200 average, pick up a lot more shares because that's an area where we're going to see a turn back around. And that's where you get to do something called DCA, which is dollar cost averaging, which is just getting your stock price or your average share price to a lower cost basis per share. Okay. So again, just wanted to share these really quick tips on, hey, where do we get in? Where do we get out for stocks? A lot of people have been asking like, oh, where's the best area to like pick up this stock? Like, what price should I get Meta? What price should I get this? Well, you can start picking it up now and just start to build your portfolio, and just know that on that pullback, when we hit that 200 moving average, that is the absolute best price to pick up the stock. So you could just wait for it to come down to that level and then start picking up a ton, or you can start purchasing. I don't like to purchase at highs. So you always want to be trying to get in at previous lows as well. So previous lows, that 200 moving average, but look to try to get in at those previous lows. And then if we end up selling off, once we get to that 200 MA, start to buy more to get your average cost per share basis at a lower cost. All right. So it's your boy, Mr. Fit to Flourish. Hopefully this helps, and I'm outie. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.